Today was a day where pretty much everything was up. If you had a play, it was up. All of the major indices were up. We had the growth sector up, we had the Dow up, everybody was happy. But PLTR, just couldn't find itself some green. It just couldn't find those green pastures. It just couldn't get itself together. And it's been this way for several green growth days now. And so in this video, I want to violently break down Palantir, whether it's a buy, sell, or a hold, some of their controversies, and what it's going to take for it to turn around. And the only thing that I ask of you in return is that you hit that ravishing like button, and also don't forget to subscribe either. Okay, so to start, just for context, just so that we're all on the same page, Palantir is a big data analytics company that provides various software platforms that companies use to make better and more efficient operational decisions. And as you use the platform, it becomes smarter and learns how to provide more and more value to you. It'll learn issues that you have and come up with risk simulations to figure out how to predict those issues ahead of time and then avoid them. If you're a healthcare provider and you're running a COVID-19 vaccine drive, well, it can identify where the vaccines are most efficiently distributed to. If there's areas where a lot of people don't want to take vaccines, or there's areas where a lot of people have lots of demand for vaccines, or there's areas that have already been serviced by vaccines, hey, this can figure out, hey, where are the vaccines going to be most efficiently distributed? If you're in sales, Palantir's platform can help you identify addressable markets and where the demand lies for customers. What customers are going to be most likely to convert? It uses data that companies already have, as well as collects new data to actually tell you where customers are, what they want, and patterns in consumer behavior to actually identify the best way to sell to them. Obviously, big data analytics companies are very useful to a myriad of different industries, but Palantir is special in the sense that it's ultra customizable. It can be fine-tuned and then learn and then run simulations on different industries and companies that hire it. Let me give you two completely different examples of how Palantir software helps actual companies. Let's start with the SEC. So Palantir works with the SEC. We don't exactly know to what capacity because they don't disclose that, but Palantir software can take millions and millions and millions of data sets from the SEC's trading records of all of the trades that take place in a year, and it can use that data to predict and identify trends, as well as find suspect trading patterns and predict fraudulent activity. There's no way that the SEC can go through each trade to find fraudulent activity. So Palantir software actually uses the data sets to find commonalities in trading behavior amongst fraudulent transactions, and then allows the SEC to identify them and then go after them. Another example in a completely different field, PG&E, which is the power grid in Northern California that had a big failure towards the beginning of last year and pretty much all the years before that. Well, they just hired Palantir to fix that problem. Palantir's platform was used to create a digital twin to actually go and run simulations on where the weaknesses of this power grid is, run simulations on what can go wrong, and drive decisions on how to mitigate that risk and improve efficiency and stop outages. The point that I'm trying to make here is that Palantir software is applicable and has proven itself useful in a myriad of different industries. Charlie, how does Palantir make money? Well, thank you for asking. You guys are so inquisitive. But Palantir makes money by scaling their customers into longer term contracts. There's different stages to this. You have the acquisition stage where Palantir goes and tries to find customers come to them, and allows them to have a free trial to see if the platform actually helps them improve their business. This is an area that Wall Street hates because free trials are operated at a loss, but it's a very important part of the business because it gets you to the next stage. And the next stage is if the customer likes the free trial, they'll probably subscribe to some of Palantir's services in some arm of their business. Maybe make a 1 to 2 year contract and see how it goes. Palantir doesn't make a ton of money from this stage, but this is a very important stage because this is when the company actually starts growing their relationship with Palantir and its platforms. And as you know, the more that the company uses Palantir's platforms, the smarter it gets, and the better it is, the more useful it is to the company. But then the third step is that long-term contract and the scaling and expansion of that. So after completing the trial stage and the beginning stage in terms of getting their feet wet in Palantir as a customer, then the customer enters into that final stage, which is the long-term contract stage and the scale and expansion stage. This is the stage at which the platform is very, very, very heavily specialized to the company's needs and provides enough value where the company feels that they want to do a long-term contract with Palantir. And odds are strong that they're expanding Palantir's usage to most of their business. Palantir actually reports revenue per customer continues to increase even at this last stage. But keep in mind, one of the weaknesses of this 3-tiered business model is that first tier where Palantir is giving free trials, well, it's operated at a loss. So if you have a quarter where tons of people are going and getting free trials, tons of potential clients are getting free trials, well, you're going to have some more losses there. And that means that Palantir's quarter-over-quarter reports are going to look bad on some of the quarters that it should look the best, just because they're trialing so many new clients. This is a business model that works really, really well if you have a good platform and you have a long-term outlook, but this isn't a business model that looks very, very good for Wall Street's analysts and their risk management formulas. Wall Street's quarter-by-quarter formulas don't take into account The fact that they have to get people funneled through these 3 stages. And they don't take into account Palantir's ability to scale either. They just take into account what it's looking at right now. So if you have a lot of people in the early stage or the scaling up stage, well, that doesn't represent where they're going to be 5-10 years from now or how many new clients are actually going to be converted. If Palantir was to be honestly evaluated based on its potential, the only way to do that is to think about its track record in terms of converting clients through this business model already. Think about its track record for keeping them happy. Think about the speed at which new clients are coming in and new clients are joining that trial stage and then converting to later stages. And of course, the total addressable market here. And we'll get more into that in a second, but I want to go into some of the criticisms. So a big criticism of Palantir is that a lot of its addressable market is government agency based. So a lot of its clients have been as well. And that means that it's worked with some controversial agencies. Palantir working with a lot of different government agencies all across the board has created this issue where a lot of people are like, well, it's going to be hard for Palantir to pitch itself to some international clients that may not want to be associated with the United States. Maybe Russia, China, or some random Middle Eastern countries don't want to work with Palantir because, hey, well, maybe they're also working with the U.S. intelligence. But it's also true that the benefit of government contracts here is a lot bigger than the con of government contracts. It provides a lot of revenue and a lot of addressable market. And it's something that a lot of Palantir's competitors just haven't wanted to touch because of the controversy. But there's a ton of money here, and it's like more than half of the market right now. And the data backs that up. 76% year-over-year growth in government. And they've also been expanding government contracts to some allies of the United States as well. So there's other governments they can serve as well, mostly in the UK so far. And a lot of Palantir's future growth is going to be in commercial. Palantir just reported that their commercial, aka outside of government opportunities in the US and UK, have increased 2.5x since February 2021. And in that same period, active commercial pilots have more than doubled. Remember, pilots are that free trial stage. Of course, Wall Street's like, free trials? Why would you want to try to get customers at a loss? That means they actually have to buy your product to make money, and that could take more than a quarter. That's disgusting. Ew. Trying to invest in the longevity of your company, that means that me and my hedge fund friends can't make money today. We need to make it today. I don't want to make it tomorrow. That is sickening, disgusting. Squeeze as much money out of them as possible and give it to us. We have to pay our 15 drivers and 4 butlers and private schools for 16 kids from 3 different wives. But remember, folks, when you read criticism of Palantir that they have to go and free trial customers in order to get them to buy their actual platform and have a long-term contract, think to yourself, why is that a problem? The only reason is because Wall Street doesn't want to have that delayed gratification. It doesn't have to want to wait a few quarters to see if they actually buy it or not. So they're like, oh no, that's terrible. We can't, no investing in trying to get clients. We just need to have clients just automatically love it and just buy the product and just give them their soul. No, folks, this is reasonable, and this is why Palantir is a long-term company. The other issue that Wall Street analysts bring up a lot is concentration risk. Something like 76% of Palantir's revenue comes from the top 20 clients. But at the same time, remember, Palantir's business model is kind of a sales funnel. You start off with the free trial, you slowly scale people in where you're not making a lot of money, but you're just starting to kind of get them fitted with the platform. And then over the long run, you really scale them in. So it makes sense that some of the biggest companies that have also most of the time been with Palantir the longest are going to be the most scaled in over here. The final issue that I want to discuss with Palantir, and this is actually something that I don't like about Palantir, is something called stock-based compensation. Well, they've given themselves substantial liabilities by giving massive options to employees that will make it much more difficult for Palantir to grow their earnings per share over the upcoming years. It's definitely something that's going to be a deprecating factor over the upcoming years, but at the end of the day, if Palantir can get another one of those hype cycles, another one of those growth cycles, we could see that overshadowed very quickly. A lot of other companies do this as well, but they have a lot of capital flowing in them, so they get away with it, like Tesla, Facebook, the likes. Okay, let's talk about valuation. So does Palantir deserve its valuation? No one debates that Palantir has some value. Obviously, it's at $38 billion in market cap, which isn't small chickens, even compared to its competitors and even compared to the valuation decrease, but it is down 50% since February. And obviously, there's been a general rotation out of tech and tech innovative because of interest rate scares and a overall de-risking, and that's just kind of how the market cycles. And honestly, it's pretty routine for the market to digest massive realizations of sectors by giving it a cool-off period, and that's totally fine. But when you consider that everything in the sector is down and money's being pulled from the market, it becomes a little bit more difficult to judge the market cap. So what we're going to do here is we're going to go ahead and compare it to some of its competitors and see relative price to sales. This isn't the perfect metric because most growth for software companies is years down the line, but when you compare it to other companies that are kind of in the same boat, it becomes a little bit more perfect of a way to gauge. So here's a heat map. The higher the number, the more you're paying for sales. And of course, with my luck, the only ticker missing a number on this chart is PLTR, but its number is 32. So if you compare that to the comparable software companies like direct competitor Okta, PLTR is within spitting distance, just 1 point below it. If you compare it to Zscale, you're looking at 40, which PLTR is about 8 below it. If you compare it to CrowdStrike, which is one of our other plays actually, this is more on the security side, but in some cases it does compete directly with Palantir because Palantir has some work with security as well. It's at 49, which is substantially higher than Palantir. Splunk is another one which is lower, but it got disproportionately hit, so it's very, very discounted right now. So that's probably why we see it trading so much lower than Palantir in terms of their price to sales. Now, if you hop over to Snowflake, Snowflake is at 100. That's a Wall Street darling. Wall Street loves Snowflake, but the price to sales is 100. But overall, I think that if you compare the price to sales with most companies that are somewhat within the same ballpark as PLTR, most of the time PLTR is trading about average or slightly less than average. So you're getting a little bit better of a deal, or at least an average deal for the sector that it's in. But of course, this is price to sales, and this is what I like to use to compare because all the analysts like to use these metrics for a lot of these growth companies and like, oh no, the Palantir is way too high multiple. And then at the same breath, they'll go and talk about another stock that they got paid to promote that has 3-4 times the price to sales. They're like, oh no, that one is way undervalued. Thank you for that dollar. And obviously 32 in context to the rest of the market isn't low, but software always has high price to sales. But I'd argue that Palantir's growth prospects are much stronger than the other companies. And because a lot of the commercial clients especially haven't gone through all of the stages, and a lot of them are still in the trial stage or the middle stage, you're going to see a lot of scaling up in the next 5 years, which means that revenue is going to go up dramatically. I'd also argue that the market that Palantir has tapped into is really only a minuscule fraction of what it will be in the future, both for governmental and commercial clients. But of course, the way that the market works is that it rewards good companies in cycles, especially growth companies. Growth companies very rarely just have a steady uptrend for years. Usually it goes like this. It's very slow for like a 6 to 12 month period, and then all of a sudden, boom, the market rewards it. Maybe it's because of a low interest rate environment, maybe because it's macro factors, who knows. Then it becomes flat again, and then maybe it goes down a little bit and becomes flat, and then all of a sudden, boom. A lot of these long-term growth companies have very, very slow trading for a long time, then they have a boom, then they lose some value, then they have another boom, and I think that's what we're seeing here with Palantir as well. So in terms of whether I would buy, hold, or sell Palantir, I would say that at this valuation, I like it a lot. No shocker there, but we're kind of at the mercy of interest rates and capital flows right now. We're of the opinion that Palantir is undervalued, but when is that going to be noticed? Well, the next cycle where you actually have people taking on more risk. The next cycle where funds start rotating back into growth. But when you really see that happen, I think you're going to see Palantir do really, really well. Anyways, folks, that caps off the video. If you have any questions, feel free to reach out to us below or join us on ZipTrader Circle. Also, quick plug, if you'd like to learn how to trade with our step-by-step lessons, our private chat, and our daily morning briefings where we brief on all the latest catalysts in the market, well, I'll go ahead and put a link to ZipTrader you below. If you're wondering what broker to trade these stocks on, well, Webull will give you some free stocks if you sign up and deposit with our link below as well. They are a fantastico broker for new and intermediate to advanced traders alike. There's tons of great scanning tools, great resources for doing your due diligence, and of course, they are commission free. So lots of things to consider if you're looking to join a new broker. Anyways, folks, have a great day, and I'll see you in the next video.